Alrighty. Alright, we're after hours on Thursday. It's February, I'm sorry, it's March. We're in March now, March the 4th, 2021. And it's 7:30 p.m. on the East Coast. It's February. We are in the after hours session. I'm trading futures, or at least I'm watching the futures. Not doing much trading this afternoon. But boy, was it a busy trading day for me earlier today. Before you trade futures, watch my videos. Yeah, you could get a simulated account and practice trading on a simulated account. To me, it's not the same. It's a world, another world when you're trading those hard-earned dollars. I mean, depending on your circumstance, if you're someone who hit the lottery and you've got, mega millions tucked away in different bank accounts across the world, and you open up a trading account with $500,000 to play with, well, you're in a totally different circumstance from the rest of us. The rest of us, the majority of us, don't want to lose money, no matter how much, how little. We don't want to lose money in the stock market. We invest, we trade to earn money, but that doesn't always happen. And it's easy to learn how to trade. There's so many free ways. I mean, you can go on the internet and there are endless lessons on trading stocks, options, maybe not so much futures, but you can find information on trading futures as well. And so that part of it's not hard to learn. The basic steps to placing a trade, uh, understanding leverage and understanding that if you trade an option, one option is the equivalent of, in terms of return or losses, of holding 100 shares of that stock. Well, futures are leveraged in a similar manner, where you buy for instance, if you buy one contract of the NASDAQ Micro E-mini futures, now these are the tiniest futures contracts, and they've only been out for a few years. Before that, you would only have the option of purchasing the E-mini futures, which are 10 times larger than what they now offer, the Micro E-mini futures. But going back, the NASDAQ Micro E-mini futures, if you own one contract, that's the equivalent of owning 80 shares of QQQ, of the stock, of the ETF QQQ. So, you buy one contract, you don't have to have nearly as much money as you would to buy all 80 shares of QQQ. However, you are going to gain or lose the equivalent amount of money as someone holding that number of shares. And, then you have to learn the nuances of owning futures contracts versus owning options. Options, you have to understand the Greeks, you have to understand time decay. Options decay with time. If you're long an option position, it's going to decay against you. You're going to lose, your option's going to lose value, particularly if it's out of the money or at the money option. It's going to lose value with time. You pay for time with options. Contracts and futures don't decay in that manner, but they do expire. They have an expiration date, so you do have to roll your contracts over once they get close to expiration date. Well, once you learn all that, you know, the basics of trading futures, the basics of trading options, then you're ready to place your first trade. Okay, you can, again, like I said, you can do it on a simulated account. And most people who teach this stuff, most experts, will tell you to do that, that you should do that for a while, for months, maybe even a year or two before you actually trade real money, so that you know you develop your strategies before putting any money at risk. In my opinion, you know, except for learning the basic entry, exit, maybe you want to learn how to set up your stops if you use stops, um, you know, or you just want to see how it all works. Maybe it's fine for that. But the experience of trading, at least this is my opinion, the experience that I get from trading a simulated account in no way compares to trading real money. Real money has a totally different impact on your psyche. Um, when you're trading real money, those losses that you take when the market goes against you impact you. They impact decisions that you make. And again, like on a previous video, you can compare it to a boxer. You compare it to what Mike Tyson says as a boxer. You know, you go in there with the game plan, and then someone hits you, and the plan changes. You know, or you know, you then you know the plan doesn't mean anything. Um, so it's the same with the stock market. You go in there with a trading plan, and trade as soon as a trade goes against you, you know, wow, you're in a situation that you may not necessarily have prepared for or thought might happen. Um, and when it's with real money, it really impacts you emotionally. You, you, um, you, you, you know, you may want to change your game plan, even though you had made up your mind on how you're going to approach things before you even place the trade. Um, so you learn a lot. That's what I really like the micro e-mini contracts, because it allows you to trade real money with less consequences than the the contracts that I was trading in the past, the e-mini contracts. I mean, I blew up a couple of accounts with the e-mini contracts because, you know, just owning one contract, if you had the type of volatility that we've had in this market this year, with one e-mini contract, you know, you could wipe out a significant account. Um, you know, one contract was like owning 100,000 shares of that the ETF that represents that account. And you know, 100,000 shares move against you, you're losing a lot of money quickly. If you have several contracts, you can get wiped out in one big move in the market. So so I like the micros, but even with the micros, you can lose a lot of money, especially if you have a market like we've had since the middle of February. From the middle of February till today, it's just been steam. I've gotten steamrolled. Um, it's been a tough market, um, uh, except for Monday. You know, it's just been all downhill for most of the indices, and it's hurt my account. And I'm obviously disappointed with that. I'm disappointed with the market. The market has been so strong for so long, and now all of a sudden nothing but weakness. And, that's kind of expected, but, the market has a way of always catching you with your hands down, with you off your guard. 'Cause I don't know, when the market is strong, it's like I'm always thinking, wow, we're due for a correction, we're due for a correction. And I always have some, mechanism in place in case that happens. Maybe I own some shares in the VIX, or I'll have some puts. I'm doing that now, but I just don't have nearly what I've had in the past when I expected the market to drop. Or maybe I outright have, sold contract, or, I've taken a short position rather than long, or I'm overall short the market. But it didn't happen this time. I mean, I was caught totally off guard. We pulled back a little. I thought we were just going to continue with the strong market. The Fed is still on our side. The Fed is still keeping rates low, and you got the stimulus package going. And everyone calls that a market put. So it keeps the market from tanking, but it looks like the market's tanking despite all that. And I guess the big concern has been the bond yields have been going up. And there's this fear of inflation. Inflation's something we haven't had in many years. But for some reason, every pullback that we have in the market is being blamed on the fear of inflation, and then the resulting threat of increased rates by the Fed. Now, Powell spoke today, and I didn't listen to the speech, but I heard some news from Benzinga. I did have Benzinga Pro broadcasting while I was trading, and when Powell's speech started, the market actually, the futures went up. I took advantage of it when they first started announcing some of the things that he was saying. Futures went up, and I sold out of some contracts. I didn't sell out of all my contracts. I always keep a core holding, but I sold out of some, and some right at the top. And they mentioned one little thing after another, nothing in big detail, but they just said, Powell mentioned this, Powell mentioned that, and then there was one mention of inflation. And just when Benzinga just mentioned that word, when the word inflation was mentioned, I didn't even catch the context. That it was just a mention of inflation that Powell had mentioned something about inflation, and from then on, we went straight down. I mean, the futures just went down, 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 just straight down. And that, we end up with another negative day, another significantly down day. And and the market amazes me in that it can hang on to one thing, one topic, one concern, and that will be the excuse for it going down for who knows how long. I mean, how long did we deal with the European woes and the the austerity in Greece? All those issues lingered for years, and were excuses for the market just going down month after month. I mean, not like, it wasn't like we were down for years. In fact, some of those years we were up, most of them we were up, but when we had down days, it always seemed to be related to European um, euro problems. And then one day that was no longer an issue. um, um, when